Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. The key pattern here, unlike the American markets, had been, and I use this term very carefully as it might still, even now, still be a false break, had been the purple highlighted mid-March to mid-May shallowy bearish shift pitch fall. Last Friday, the market punched up through the purple upper time, which is currently 194.5. The first time since June last year, when it was still just then a nascent pattern. That day last week and most of this week, the market had been hesitating around the next resistance overhead, the congestion between 197.25 to 198.5. containing the July 21 low at 197.25, and importantly, now the slowly declining gold long moving average, currently 197.25. In the process, the market formed a 2-week-old bull flag. A little bit more on that later. Now, I said last week about this move, and I still mean the essence of it when I said, and I quote, "This is a potentially transformative event, and I'll be watching it closely just in case of a false break." However, this is not the only pattern that is seen in this market. As I pointed out last week, so that's now 2 weeks ago, when I said, and I quote, "You see, we also have two other patterns, both rectangle patterns. The first is the older September to November 2025 rectangle pattern between the congestion around the combined March 24 to September 25 lows at 187.75. Specifically, a congestion between 186.75 to 187.75. That is the bottom of the rectangle. The top is the congestion between 197.25 and 198.5, containing the July 21 low at 197.25. The second rectangle pattern is derived from the first and utilizes the same base, but has a closer top side based around the flatlining mauve medium moving average, currently 192. So significantly narrower, end of quote. Okay, so I'd like to deal with the second narrower pattern first, and that had, because it was a fairly narrow rectangle, primary target at 195.25 and a secondary target at 196.25. Both these targets were reached last week. The first and larger rectangle pattern had a primary target X up in the 205.25 area, but secondary hard to reach target X1 up in the 207.25 area. I should now point out that both targets overhead are within an old congestion band, dating between December 2018 to February 2019, between 204 even to 208 even. Finally, the very recent bull flag pattern I spoke about earlier, this had a primary target, a target that has already been reached, at 200.5, and a secondary harder to reach target X3 up at 205.75. So as you can see, there is a lot going up on the top side at the moment. Minneapolis wheat. The market here, as I've said often in recent times, looked and looks more in common with Paris milling wheat than with Chicago or Kansas City wheat. However, first I'd like to look at the larger picture, and here we still have an extension to a large pattern I spoke about 26 weeks ago, half a year ago, and ever since, but is now under severe threat. When I said, and I quote, "We are also possibly on the threshold of a really big pattern, a December 24 to date possible cat's ears pattern." This is a longer term pattern, but I urge you to keep remembering this idea, as if we travel and stabilize a little lower than where we are, I may feel obliged to deploy it along with all its ramifications, end of quote. I stood by this pattern idea for the past 26 weeks, half a year. But this patterned idea is now under threat, and I'm thinking of retiring it as a possible failed pattern idea. We are today far away from triggering this pattern, farther than we have been since it formed in August last year. The catalyst for this move up has been the push up and close over the slowly declining long moving average, currently 593.25. The first close over this moving average since mid-July last year. This past week, the market exploited that move up. We pushed up not only clear over the gold long moving average, but also the resistance above. From the April 2021 low at 606 even and the October 21 high at 611 even. This all ties in with my thoughts from 6 weeks ago when I said, and I quote, "This leads me to what has developed since September, but really since mid-October." This is last year. And that is a possible sideways rectangle pattern between the uptrend below and just under the gold long moving average overhead. This might become the immediate pattern to watch for. End of quote. Well, that is what has happened. We broke up higher, out of the rectangle pattern, and last week I gave some possible targets above for such a break of a primary target X up in the 611 area, right on that October 2018 high, and a secondary harder to reach target X1 up in the 616 area. Today we have reached target X at 611, and we came so damn close. 615 has been the high. We came very close to 616 target X1. Additionally, over the last 2 weeks, much like other weak markets, we have formed a small bull flag with a primary target in the 601.75 area and a secondary target. Well, the primary target's already been achieved in that, and a secondary harder to reach target X2, which is up in the 615.75 area, smack bang on target X1 at 616. As I say, today we came within 1 cent of achieving both of those targets. London UK feed wheat. Since the peak in mid-July last year, we've seen prices ease lower, moving eventually below all the moving averages in late December last year, and penetrating lower as recently as Christmas this week. As Christmas week I should say, but not managing to stabilize down there. What is more important here, and this is key, is that we are even now still establishing the market longer term, establishing the market below the very, very important dark blue neckline extension on my daily chart, which is currently 168.85. A neckline to a pair of longer term patterns, which I will shortly detail. Please remember that level. Now, I also drew some weeks ago a bright green, late January to mid-July, quite shallow bearish shift pitch wall to hopefully show the newer bearish angle of attack in this pattern, through this pattern. Well, in this part, the market is in between the bright green upper time above, currently at 174.60, and the bright green middle time below, currently at 152 even. To be honest, this pitchfork has been disappointing, and as I said 8 weeks ago, and I quote, "I really don't think this pattern adds much to the conversation right now." End of quote. This all leads me to my final points. The same points I've been discussing here for well over a year, as some of them were something that I noted back in my annual commentary back in January 2025. To see these, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 23 to April 25 bearish cat's ears pattern. That's akin to a double top, but formed after a big fall such as the fall we had in early 2023. As well as this, we have an even longer term second pattern, an August 20 to April 25 very large head and shoulders pattern, head and shoulders top pattern. These two super long-term patterns both rely on one single feature, and that is their common neckline, which is highlighted in purple on my monthly chart, currently 168.85, same as on the daily chart I just spoke about. Thus, from these two longer term bearish patterns, we have a primary target X3 for for the bearish cat's ears pattern will be down in the 127.5 zone, and a secondary harder to reach target X4 down in the 112.85 zone. But a head and shoulders top, we would have an even longer, lower primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have on any of my 200 or so charts. The 1975 to date, yes, a half-century old uptrend, currently at 66.15. I'm not even going to give you my secondary harder to reach target on this pattern as it's below zero. Please, please, please bear in mind that these are very long-term targets, possibly stretching over many years, but they are still targets below for these patterns above and have not been negated. Now, that all being said, July 2025 with changeover threw a major spanner in the works for such longer term patterns. The reactionary, immediate countering monthly key reversal up for July last year went back above the purple neckline, but stopped at the 50% absolute Fibonacci line at 180.5 and just under the bright green 2023 to date upper bear channel line, currently 174.55. The question is posed, and it is a longer term question, is whether this was just a reactionary single month move higher or the beginning of something else. Once again, as in my previous commentaries, I'll continue to stick to the reactionary single month move higher, despite this week, and I waited a little later today to confirm this for last week, despite making a weekly key reversal up back then last week. The moves up now did not look like forming a strong enough base. Not yet, but I am prepared today more, and I have been for a couple of weeks now, more than in previous weeks and in months, to start looking at the possibilities of a new base of support. There's one caveat to this basing higher idea, and it's one I've already mentioned. The bright green mid 23 to date big bear channel, currently 127.15 to 174.55. Even with such a big reactionary move back up mid last year, we are still sitting within this big bear channel, and it does have the advantage of already having had at least the minimum 5 touches necessary to legitimize it as a bear channel. For all this discussion, we are still dealing here with some very long-term patterns, and you should please always bear that in mind. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.